Thank you, Rishi, and thanks for all of your hard work and leadership in bringing all of us together today. Frank, the Asia Society always throws an amazing event, and I've had many occasions to come here and speak on many different panels, including the Bollywood event, which was great fun and very interesting as well. And I was just saying that I think that the leadership, the scholarship, and the policy influence that the Asia Society is wielding, both from my time in government and now my time in the private sector, has just been an impressive thing to watch, and also to see such bullish confidence and optimism on India and India's role and India's importance. So thank you to the Asia Society. Arvind Panagariya, just a pleasure to be able to engage with you now in your post-government incarnation, as we had many opportunities to work together when we were both in government, working on building and advancing this relationship. And so it's a pleasure to see you also continuing to be so active on the U.S.-India corridor from the private sector. And then Shailesh also just have really enjoyed working with you in so many different incarnations. I particularly wanted to take an opportunity today to introduce our keynote speaker, because, when we first had the opportunity to meet earlier last year, and I had a sense of the vision and the ambition that you are bringing into your new role as, I guess it's not new anymore, but still as the Consul General here in New York. You've obviously had a very storied career in the Indian Foreign Service, have been ambassador, and have worked in so many different, posts across Latin America, across Central Asia, across Southeast Asia and South Asia, and that has been impressive in and of itself. Your scholarship in sociology, in forestry, and in physics is also quite astounding, and broad and diverse. What I was most impressed by is your vision and your ambition for how, as Consul General, you can really play such a critical role in advancing U.S.-India ties and in engaging the communities and the constituencies that can really help build this relationship and address so many of the critical issues. And we talked quite a bit about education and your interest in education. We were talking about infrastructure and how do we bring and leverage much greater investment in infrastructure. But there are so many other areas as well. And so it is truly a delight and a privilege to welcome you to this event and to hear your thoughts tonight. Thank you. Present to you, Ambassador Sandeep Chakravorty.
Thank you. Thank you, Nisha, for this very generous introduction. I would first like to mention that when we met a few months ago, we had in fact planned for an event, a budget event, with USIBC and the consulate as partners. And then we came to know about the KPMG Asia Society event. And we decided to merge the two because, we thought more the merrier. And really, I think it was a wise decision because, as you said, Asia Society does really wonderful events. I wish to thank all our partners, and I wish to thank Dr. Panagariya for agreeing to join us. I think his presence here will add a lot of what you said today will be watched closely back home in India. I think so that adds value to the event. Thank you all for being here. I would like to say that as my personal view is that being a diplomat, one can be a bit dispassionate about a budget. Do you know why? Because we don't pay taxes. But having said that, I being representing the government of India, what I told the co-panelists or the panelists that what I would like to do is give my understanding of the government of India policy and how it was manifest through the budget. So I would like to lay out what I saw was the highlights of the budget, and then of course KPMG and the other panelists they would have more flexibility in analyzing the implications of the budget for investors and also for the India-US relationship. Now, so I will begin by saying that as some of you may not know, the Union Budget of India is a constitutional requirement. The Article 112 of the Constitution says that the Government of India needs to present what is known as the Finance Bill and the Appropriation Bill. Historically, it used to be presented on the last working day of February. But over the last few years, there have been changes, and then this government has introduced several changes, and now it is presented on the first day of February, so that things are ready when the financial year starts in India on April 1st. Like many things in India, good or bad, it has a colonial legacy. And the first budget was introduced in India on April 7, 1860, from the East India Company to the British Crown. The first Indian budget was presented by a gentleman known as James Wilson on February 18, 1869. Now, Wilson is a very famous man. Why? Because he was finance member of the India Council that advised the Viceroy. But more interestingly, he was the founder of The Economist, which many of us read, and also established the Standard Chartered Bank. So, we come from with that pedigree as far as the budget is concerned. Earlier, we used to have a separate railway budget. But since last year, the railway budget and the union budget have been merged. The logic of having a separate railway budget was that in the early 20th century, in the 1920s, 80% of the government revenue came from the railways, but no longer now. So I don't know whether it's a thing for the good or the bad, but the economy has become so huge that the railway contribution is so less that the government decided to merge the two budgets. Now, the budget is a very anticipated event in India because it is a political as well as an economic tool in the hands of the government. And this being the last year before a full budget could be presented before the elections, I think there was a lot of anticipation and a lot of anxiety, I would also say, amongst economists and investors. And I think what has gladdened most analysts is that the government has been able to maintain the balance between growth and equity. The economic survey, which comes out a few days before the budget is presented, said that the slowdown of the Indian economy that we witnessed in 2016 and 17 has been reversed, and it is now moving in full speed ahead. Dr. Arvind Subramaniam, our chief economic advisor, said that in the coming year, we are expected to add 0.725 to 0.75 percentage points to the current year's expected growth, which is 6.75. So we are looking at 7.5% growth in the next financial year. So on the basis of what has happened so far, a reasonable bet could be that the growth will stabilize somewhere between 7 and 8% in the next financial year, provided the global environment remains supportive. The focus of this year's budget, as our finance minister said, is on the 100 million families of India, which constitutes about 40% of our population. And they are the most disadvantaged section of our society. So I think the government has this year taken care to focus many of the budget provisions on this section of our society. And you see that in very people-centric focus on agriculture, rural development, health, education, employment, and the medium and small enterprises. The focus can be seen by 13% higher allocation in the social sector, education and health. The allocation is in the range of 1,380 billion rupees, and the allocation in infrastructure is 20% higher at almost 6,000 billion rupees or 6 trillion rupees. The intention is to improve the living conditions for Indian citizens, and overall 14.3 trillion rupees allocation is there for rural development and reducing the gap between the rural and urban areas. The finance minister said that as the country develops, our social security net needs to be strengthened and expanded, and the budget clearly brings out many initiatives in this regard. However, there has been fiscal prudence, and the target of fiscal deficit has more or less been achieved. There has been some slippages this year, with fiscal deficit being 3.5%. But that is, I think, because of the GST revenue not coming in. I think the budget only accounted for 11 months of goods and services tax revenue. But the target for next year is 3.2%, which I think is on the glide path, which I think the government is committed to maintain. I think that will make Dr. Panagariya happy, because I think he's a strong advocate of fiscal prudence. Personally, I see the budget as a budget for rural India. It's a budget for the poor in India, and it's a budget for the farmer. And the expenditure in the budget has been prioritized on the sectors which required maximum support, that is agriculture and rural areas. I saw two game-changing concepts in the budget. One is the minimum support price will be 1.5 times the cost of production, and a comprehensive health coverage scheme. We have always lacked that in India, and what we had before was barely sufficient for a small group of people. Now that is being expanded to cover 100 million families, and the coverage is also substantial. I think they are estimating that the coverage will be per head will be around 5 lakh, or about $8,000 I think, and that will revolutionize healthcare in India, because that will encourage hospitals to go into the rural areas, because now they know that they would have some financial backing. The structure and how it will operate is still to be worked on, but I think it's a great policy initiative for the health sector in India. Now I will just go into some detail about the 4 pillars on which the budget has been based. One is, of course, the attempt is to boost consumption, and boost consumption in the rural sector. And a lot of initiatives have been announced: food parks, infrastructure, village infrastructure, roads, and investment in fisheries, in animal husbandry. And the vision is this is in line with our Prime Minister's vision of doubling farming income. And I think a lot of activity will now take place in the rural sector, and that will boost consumption in India, and that will also boost capacity utilization in our industrial sector, which right now is about 70 to 73%, and the expectation is that it should rise to 80%. The other focus is to boost investments, and as you know, the insolvency and bankruptcy code is in place, and more than 500 companies have been admitted to the National Company Law Tribunal, and they are in various stages of resolution. In addition, more than 2,000 billion rupee program has been established for the systemic non-performing assets in bank, and I think banks are becoming more healthy, and they will now release more funds into the market, and this will certainly boost growth in India. Another very conscious effort of the government of India is in improving our ranking as far as the ease of doing business is concerned. We made news, I think, late last year when we jumped 30 places to be 100th in the world, but we are still 22 places behind China, I think. So now in this budget we have 372 specific measures which the government will undertake in mission mode to improve our ranking as far as the ease of doing business is concerned. I think we will all, with bated breath watch our ranking next year, how well we do. I think that will be also a very, very significant development. Another point to mention is that our 3 giant general insurance companies, they will be merged into one big general insurance company, and that will now be listed. As of now, it is entirely in the public sector. Several measures have been announced to boost exports, and the focus this year is to boost agriculture exports, which are now in the range of $300 billion a year to $100 billion. There is also focus on employment generation, and as you all are aware of the Make in India, so I think the government has given certain incentives to promote employment generation in India, and also some protectionist measures have been taken. Customs duty on certain goods where we feel that Make in India is succeeding, and where baby steps perhaps have been taken. So the need was felt to protect our domestic industry, particularly as far as electronics, leather goods, footwear, toys are concerned. Corporate taxation, the maximum rate has been reduced for MSMEs. Now it is 25%. 99% of corporations in India are in this bracket. Corporate taxation for big corporates is still at 30%. But I heard the finance minister say in a press conference that the big corporates enjoy a lot of exemptions. So their effective taxation is about 22%. So I think India does have one of the lowest corporate taxes in the world, perhaps not as low as the United States now, because that has come down to 21%, I think. Now, so that is as far as corporate taxation is concerned. We are also very, very ambitious on our defense production, and a lot of investment is going in improving our defense capability. As you all know, India is one of the leaders as far as purchase of defense items is concerned, but we lack sufficient domestic capability. So a lot of investment we will see in the manufacturing of defense items, both in the public and private sector. So all in all, I feel that this budget was pro-poor, pro-farmer, pro-rural India, pro what some people say is Bharat. And I think this goes with the government's motive of Sabka Saath, Sabka Vikas. I think on that account, I feel that this budget will really improve the living standards of a large percentage of our citizens who have somehow been deprived of the benefits of growth. Thank you very much, and I look forward to hearing the panel.
Good evening to all of you. Thank you, Ambassador, for your extremely incisive and powerful narrative on the budget. There's a lot that has been covered in a short time, and what I would do is expand my remit a little bit beyond the budget to talk about the India story. For those of you who were there last year, I did kind of give a feel of what's going on in India, specifically looking at what the government has done over the last 4 years or so. And maybe I'll just kind of reflect on what's really happened more so in the last 12 months. But before that, I know there's an interesting panel here talking about geopolitics and what's happening around. But if you look at 2017, it's been a rather eventful year. Whether you look at UK finally signing Article 50 to trigger off Brexit, you're looking at the North Korea crisis, you're looking at climate havocs which are happening, and you guys are familiar with what's happened. You've sort of borne the brunt of it with all the hurricanes that happened, costing the U.S. economy close to $200 billion. The cyclone bomb that was there, and of course the Thomas fires in California. So it's been a very, very interesting year that's happened. And if you look at what happened in China, a single day sale resulting in $24 billion. And that's really talking about the consumption story, some of which is also happening in India now. And just when you thought 2017 would end on a calm note, President Trump signed the historic U.S. tax reforms, obviously revolutionary in terms of what the scope of those reforms is and the impact that it could have on the global economy. So effectively what you see is the developed economy is going through true contrasting trends. On the one hand, there is a rebound of economic growth. On the other hand, there is political fragmentation. And that's also, what you're also seeing is on the money markets, things have really gone up. In the last 12 months, if you were to reflect on the Bloomberg analysis, they're saying that the total market capitalization of planet Earth, which is of all the listed companies on the planet, is close to $80 trillion. And that's likely to go up to $100 trillion. So that's really the impact, and India is obviously seeing a significant spike in the stock market. So it's been a complete bull run over the last few years, but for the fact that you had a minor blip as a consequence of the budget and the long-term capital gains, but by and large, stock markets around the world are really firing. And of course, with what's happening in the political landscape, there is a natural tendency to look towards East, an opportunity for China, for India, to really, look at reforming, renewing and regaining their foothold in the global landscape. And in that respect, if you look at the India story, if there were two words that would kind of summarize what India today is, I would believe that that's being bold and assertive. And that would reflect on three dimensions, whether you look at the government, you look at industry, or you look at individuals. If you look at government, after 20 years, you had a prime minister who went to Davos. And it's quite significant because he went with a contingent of about 100-odd diplomats and industry leaders, talked about globalization, climate change, terrorism. We had demonetization, which a lot has been said on demonetization, and it's put us on the global headlines for right or wrong reasons. You could get differing views on that. And then you had unprecedented reforms around GST. Now, GST, as you know, has been something that has been on the anvil for the last 10 years. We've not been able to make that happen because it required a constitutional amendment. But finally, GST is now out there. It's had its own share of teething troubles in the first few months. But I would believe that these things are going to settle down in the months and years ahead. And there are all kinds of analysis which has been done around the impact that GST would create on the overall economy. It's expected to be between 1.5% to 2% additional growth that's going to come to the GDP of the country. If you look at industry, and many of these names are familiar to you, but the fact is that these companies are getting global. Zomato has acquired Nextable, a US-based restaurant reservation and table management platform that is today competing with Priceline's OpenTable, SeatMe from Yelp. Ola, which is operating in the whole private hire vehicle business, is now operating in 110 cities and covering about 125 million odd users. And now it is expanding its horizon in Australia. It's covering 3 cities in Australia: Sydney, Melbourne, and Perth. And if you look at Tech Mahindra is also doing an acquisition, has acquired actually CGI Healthcare Solutions. It's strengthening its presence in the healthcare space and moving up the digital adoption ladder. On the people front as well, the combined wealth of the richest in India today is close to $640 billion. $640 billion out of $2.5 trillion, which is about one-fourth of the total economy, which is held by the richest. And that is obviously the whole inequality that we keep talking about, which is sought to be addressed by this year's budget. There are 7,000 high net worth individuals which have migrated overseas to fulfill their global aspirations, which is a growth of close to 17% compared to the last year. So there's a lot that's happening, which is leading us to believe that India of today is a lot more assertive and a lot more global. And that's as far as India getting global is concerned. But if you look at what's happening in India, there's a lot happening there as well. India today is a $2.5 trillion economy, the 7th largest in the world, and 5th largest in terms of purchasing power parity. It is expected to be the 5th largest economy very soon. It will be overtaking UK and behind US, China, Japan, and Germany. The GST reform that we talked about has resulted in the taxpayer base, indirect taxpayer base, going up by 50%. We've added close to 10 million additional taxpayers that have got registered under the new regime. The voluntary compliance has also increased significantly, which really shows the intent of the government in trying to expand the taxpayer base to cover more and to really improve the tax to GDP ratio that is abysmally lower at this point. The GST Council, which has been set up, and you didn't hear too much about GST in the budget because you have a GST Council which is taking all the executive decisions, and that is really a perfect example of cooperative federalism. I mean, on one hand, you have the whole thing of competitive federalism, where you're having a situation where states are competing with each other in terms of attracting more investment, and there is a ranking of the states being done. But at the same time, you also have this whole example of cooperative federalism. And this is just one example. If the government actually replicates this in some of the other areas, whether it is in terms of the fragmented agricultural market that you have, the electricity markets, or even resolve some of the interstate water issues that we have, or the direct benefit transfer, these are some areas where we have a clear divide as far as the states are concerned, and this could be an example of bringing some of that together. The stressed asset situation has been a point of big concern, whether it is in respect of corporates or whether it is in respect of the public sector banks. And both of these are sought to be addressed outside of, not necessarily within the budget, but there is a lot of effort that is going outside of the budget. So the bank recapitalization is something that the government is focusing on. Close to $14 billion of capital infusion that's going to take place to shrink some of the unviable banks and also encourage greater private sector participation, including increased lending to the medium, small, and micro enterprises. The Insolvency and Bankruptcy Code, which is again a profound legislation that has come in, which is going to help in addressing some of the non-performing asset situation that we have. Out of a close to $850 million of claims that have been made, in 9 out of 10 cases, the recovery is close to 33%. So it is something. It is it's a step in the right direction. The time frame in terms of resolution of some of these disputes may take it may take some time, but clearly a step in the right direction. The disinvestment is another area which the government has clearly been focusing on. The last few years, the disinvestment was not that high, but this year they've been able to realize, or likely to realize by the end of the year, close to $1 trillion rupees in terms of disinvestment. And what's really on the anvil is the privatization of Air India, dilution of stake taking place there, which is likely to happen, and the government looks at closing that by December. And Ambassador spoke about the merging of the 3 insurance companies, which are also going to get listed. So there's a lot on the card next year, and possibly the amount which has been set aside for disinvestment next year may be a little less, given the track record for last year. But we will have to see what happens there. Clearly, India is very much open for business. And last budget, the significant change that was brought about was the abolition of the Foreign Investment Promotion Board, which is the investment regulating authority in India. And over the years, if you see in the last 3 to 4 years, the government has made continuous efforts in terms of removing some of the sectoral limits that were there, as also liberalizing the investment in terms of the approval requirements. So from moving from an approval route to an automatic route. And 90% of the investment today is now covered under the automatic route. This has resulted in a sharp spike in the FDI in the last 3 years. It has gone up from $36 billion to $60 billion in FY 16-17. There's also been a significant rise in the M&A activity in India. And a lot of this is happening in sectors like communications, energy, industrial, and financial services. And the deal volume has increased from $50.6 billion in 2016. Last year, it has gone up to over $76 billion. The total US investment, FDI, in India has also jumped 500% over the last 2 years. And I think I was hearing that 20% of the US IBC members have committed close to $28 billion since 2014. Just last year itself, Amazon has proposed to invest about $500 million in the food retail business. Skechers is looking at opening 500 stores in India in 5 years. And IKEA plans to open 25 stores by 2025, with the first store coming up in Hyderabad this year, followed by Mumbai and Bangalore. Their investment is going to be about $1.9 billion. But that's the commitment that they made when they got the approval in 2012. So there's a fair bit of activity taking place in terms of foreign direct investment, in terms of M&A, and it is really touching different sectors. The recent liberalization was around aviation, single brand retail, 100% under the automatic route, construction, non-banking financial companies, power exchanges, and the list is endless. So what does this mean in terms of aspirations? India today is $2.5 trillion economy, wanting to become a $5 trillion economy. And for that, you need a significant shift. The Indians today are definitely moving, consuming, and creating more than ever before. And in fact, it was often joked that Indians spend less time discovering about their own country and spend more time in other countries. And that is something that is probably going to change in times to come. If you look at what's happening in the transportation space, and that's a big revolution that's happening. If you can imagine the number of people traveling by railways, it's close to 8 billion people who travel by railways every year. That's the highest in the world. In terms of air traffic or air travel, we're now at 100 million, which is exceeding the US and China. The Delhi-Mumbai route is the third busiest route. 48,000 trips are made on the Delhi-Mumbai route every year. And the budget plans to augment the airport capacity from 124 airports that we have today to take it to 500 airports. And the finance minister in his budget speech said they want to get to a point where about 1 billion passengers are traveling within India every year. So there's going to be a huge amount of work that's going to happen in terms of domestic connectivity, in terms of you're bringing in some of the airports that are dysfunctional today, some of the helipads. So a lot of work that's going to happen on that. They're also looking at waterways as a means of transportation. And again, anecdotally, in one of the speeches, the finance minister talked about the dichotomy in terms of the number of people that travel abroad and the number of people that actually file their returns. So there's clearly another example of where there is a clear disconnect. And this is all the big things, but the smaller things are also happening, and which we've not realized. But India is a populous country. We have 34 babies who are born every minute, and you can imagine what that means on the maternity wear market. That is increasing from $3 billion to $10 billion, growing at a CAGR of 13% every year. And this is just one example, and there are many more such examples in terms of the growth that we're likely to see. Tesla, Apple, Cisco, they are producing, they're producing products for the 1 billion population, the top 1 billion population. And this is really an opportunity where India can play a role to address the balanced 6 billion population that exists worldwide. But all is not great. Yeah, there are significant and more challenges to move this economy to a $5 trillion economy. And this is an area where government is really playing an important role as a catalyst to overcome some of these challenges. The first one is really around inclusivity. India's richest 1% contribute or own about 53% of the wealth, which has gone up from 36% that it was in 2000. And in comparison to the United States 1% contribute, own about 37% of the wealth. So the inequality is really significant. The job creation, I think we spoke about, Ambassador spoke about job creation. 85% of the labor force in India earns less than $155 per month. So, and 9% only is in the organized sector. So large part of this, employment is in the unorganized sector. The unemployment in India is likely to reach 18 million by 2018. So it is going to be extremely critical, and we are going through the whole process of digitization, artificial intelligence, and robotics. How does that play out into the manufacturing sector, which India keeps talking about, making the manufacturing sector grow? This is going to be a pressing challenge over the next 3 to 5 years, and there's a lot needs to be done, especially in terms of labor reforms that's going to, and skill development in order to be able to provide jobs to the upcoming youth. Agriculture is an area of focus. A lot has been said on the agriculture sector, but clearly the focus has to be on productivity enhancement and modernization of agriculture through private sector participation. The government is pushing in terms of creating more competitiveness. The whole focus on increasing the minimum support price is an important one. But again, how is that going to play out? Is it going to yield additional income in the hands of the farmers? There is this whole discussion around what formula is applied. Will that really result in increased income? There is obviously the whole focus on creating agricultural marketplaces, cluster-based agriculture, and a whole lot which is happening on this. The real opportunity is embracing technology in agriculture, because agri-tech is going to be a big space. That's going to address issues around supply chains, improving farmer efficiency, and so on and so forth. And the last challenge I would want to talk about is a stress asset challenge. The non-performing assets today are close to $136 billion. And so whatever the government is doing in terms of the new code, insolvency and bankruptcy code, is a step in the right direction, but there's a whole lot that needs to be done here. So with that, what were the key themes of the budget? I won't get too much into this because, it's already been covered by the ambassador. So essentially the sectors, the focus was really around driving long-term growth. There was a lot of speculation. Is it going to be an election budget? Is it going to be a populist budget? I don't see too much of populism here in that sense, because people were expecting that there will be significant, the personal tax rates the slabs would increase, and there will be more money given to individuals. There's not much which has happened there other than a small amount of a standard deduction which has been given to individual taxpayers. On the corporate tax rate side, as the ambassador said, that the rates have been brought down to 25%, but that's really for companies which are drawing a turnover less than about $40 million. So that's really the scope of some of these. I mean, the focus has really been on infrastructure, on agriculture, health, which is a universal healthcare scheme, and there has been some amount of focus on aligning India's tax policy with the global tax trends, and some of this is already kind of work which has been done over the last few years, and this has continued in this budget as well. So if I just talk about the tax proposals, the first one, like I said, is an important one in terms of, and this may be a phased approach that the government is following. So last year, they gave this incentive of 25% tax rate for companies which had a turnover of less than $7 million. This year, that turnover threshold has been raised from 7 million to 39 or 40 million. And it relates to the revenue or the turnover that you had in financial year 16-17. There are companies that are looking at alternative structures in terms of whether they should have a company or a limited liability partnership. This is an issue that still merits evaluation because the tax rate for LLPs still continues to be 30%, but for companies below this turnover have been reduced to 25%. The advantage of an LLP structure is that you don't have to pay dividend distribution tax, which is a significant cost. And a lot of this dividend tax is not creditable in the US. Also having regard to the fact that in the US tax reforms, dividends are now eligible for an exemption once they're repatriated to the US. This will become an important consideration as companies look at what kind of structure they need to have in India. The second part is an important one in terms of foreign companies having operating in India. There is a concept called business connection, which determines the taxability of a foreign company in India. It is akin to a concept called permanent establishment under the tax treaty. India there has been a lot of work which has happened in the international arena around base erosion, profit shifting, where basically the G20 and the OECD countries were looking at how there needs to be a balance created in terms of where economic activity is taking place and where profits are getting generated. India has been an active participant around that. There were a lot of measures taken, and India has been a signatory to most of those action plans that have come in. And this is part of that endeavor where the government is saying that it does not matter whether you have the authority to. So there was this whole issue of when I do a contract, when I get business in India, do I need to have the authority to conclude contracts to create a taxable presence in India? India is now saying that no, you do not necessarily need to have an authority to conclude contracts, even if you are playing a principal role in concluding that contract. That could be good enough for the foreign company to have a taxable presence in the other country. There is going to be no immediate impact for US companies because this is a provision that has come in the domestic tax law. The treaty still remains sacrosanct, and unless the treaty between India and US is amended, it should not alter the position. But it might create some uncertainty on the ground because the tax authorities may take a more aggressive position as they look at the domestic law. There is also a focus on the whole digital economy. And this is a space that was not addressed by the BEPS action plans. The volume of digital transaction has expanded exponentially, and there was a feeling that there needs to be more universal consensus, global consensus around it. So the final word on this is not yet out in terms of how digital economy needs to be taxed. India has already gone a step forward, and 2 budgets back, India introduced what is called as equalization levy, which was applicable to online advertising services. The scope was restricted in that sense. It was not covering a whole lot of transactions. And one was hoping that with times to come, India might expand that scope and cover more and more transactions within the remit of equalization levy. But what the government has done in this year's budget is introduced a new concept called significant economic presence, which really means that if you're downloading software, or you are soliciting business where the users are based in India, you could potentially create a taxable presence because you are having a significant economic presence, and it goes beyond just having a physical presence. The treaties also talk about the physical presence as a decisive criteria, but now we have this concept where a significant economic presence in another country can also result in taxation. The most important provision in the budget, which resulted in a strong reaction from the stock market, was the reintroduction of long-term capital gains on equity shares and in equity-oriented mutual funds, which basically meant in the past when you held shares and mutual funds for more than 12 months, you were not subject to any capital gains tax. This was quite a departure from what was happening globally, because most of the countries do levy capital gains tax on shares. The government felt that this was diversion of money happening into financial instruments. The stock market was doing very well, and most of these investors were not paying tax. So now this long-term capital gain has been reintroduced at the rate of 10%. It applies to income which you get more than $15,000. So basically, or $1,500, so which is 100,000 rupees. On the excess amount of gain that you make, you would be subject to this long-term capital gains tax. There are a whole lot of issues which I will not get into, but obviously this led to a lot of uncertainty as to what happens to foreign institutional investors who are coming in from different countries. How does it impact them? What happens to, where you've not paid securities transaction tax, because earlier you used to pay security transaction tax in lieu of the long-term capital gains tax. So what happens if you're issuing bonus shares, or if you're issuing right shares, or if you're going for an IPO? You may not be listing on the stock exchange, and in that situation, does this long-term capital gains apply or not? So these are some of the issues that have recently been addressed partially by the government through a circular that was issued right after the budget. But in the interest of time, I won't get into all those details. And last is basically on the transfer pricing side, the country-by-country reporting requirements have been rationalized and aligned with the global norms. I think this is the second last slide, just talking about ease of doing business. There's been a lot of focus on the methodology of doing assessments, and the common perception around India is actually a reality. The fact that India tends to be aggressive, there is no consistency in doing tax audits. There's a lot of aggressive assessments that happen. To address some of that, India is embracing technology to move towards a concept of e-assessment, which will essentially be a faceless assessment. And the contours of the scheme are yet to be finalized, but it will remove the element of subjectivity and personality issues, because sometimes the officers tend to be a little aggressive. So hopefully some of that will be addressed through this e-assessment. We'll have to see how this plays out, because there is a lot of apprehension that e-assessment could also lead to possibly not the kind of results that taxpayers want. There are some incentives which have been given to the startup community. India obviously wants to encourage more and more startups in India. I don't think so this budget has fully addressed all the issues, but it is certainly a step in the right direction. There is a tax holiday which is currently available to startups, which is available for a period of 3 years. And the scope was a little narrow in terms of how a startup was defined. It was largely defined as companies which are engaged in technology or IP-related business. And that definition has now been expanded to include companies which are engaged in scalable business models, having high potential for employment generation or wealth creation. Now, obviously, these terminologies need a little bit more, elaboration on what would be those situations where there could be high potential for employment generation or wealth creation. But certainly, again, the scope seems to be wider, and also the timeline, the sunset period for this has been extended to 31st March 2021. Just move to the part on cryptocurrency is worth mentioning. India has sort of said in this budget speech that they do not recognize cryptocurrency as a valid legal tender. And obviously, there was a lot of expectation, would government come out with some regulations or not? The fact is that they have issued a lot of notices to companies or to individuals and taxpayers, who have made gains around cryptocurrencies. And we will see some, action being taken on the ground. But as far as legalizing cryptocurrency is concerned, that's not likely to happen. So where does this leave us? In essence, India is in a right direction as far as reforms is concerned. The budget is not going to be the only event where reforms will be announced. This is a government that is focusing on reforms through the year, so this is a kind of if I would say, it's a more of a work in progress budget. There are clearly 3 clear levers for change that we look at it. The consumption story, as I talked about, is extremely promising. It's going to continue to drive growth and create opportunities both for domestic and international companies. The government has shown its intent of being bold, and it's now focusing on moving to the bottom of the pyramid, improving the rural livelihood, improving the ease of doing business, ease of living index as well. But what is going to be critical is going to be execution. How are you going to focus on the effectiveness of implementation of all the reforms that have been announced over the last 3.5 years? And that's going to be critical to decide where we move ahead in times to come. So finally, just to quote, success is where preparation and opportunities meet. and India today seems to be at that intersection. Thank you.
Before we get started, I think we are going to have a little bit of fun. We will get into the content, but we're going to have a little bit of fun before. I think I'm going to ask each one of our panelists to stand up and break into their favorite dance routine. No, I'm just kidding. I'm just kidding. I'm not going to make you dance. What we are going to do is I am going to ask you some rapid-fire questions, just 4 or 5 questions, and just for the audience to get to know you a little bit better. Start with you, Nisha. What was your first job?
The lamp factory outlet. I was fitting lampshades to bases. That's what I did in high school.
Very interesting.
Summer money.
Other than email, what is the first thing that you read in the morning?
I'm sorry to admit this, but Twitter.
Tell us about a habit that's contributed to your success.
I'd say anticipating what the other person most needs or is motivated by, so that I know how to engage and where to meet in the middle.
Okay. Are you a morning or a night person?
Definitely night. Middle of the night, probably.
And your favorite hobby?
Cooking.
Okay, great. I'll turn to you, sir. Your first job?
Same as my last.
Okay, same as your last.
I was a lecturer at the University of Rajasthan.
So you've always been a lecturer. Great. Other than email, what is it that you read first thing in the morning?
And read Times of India, Economic Times.
Okay. A successful habit that's contributed to your success?
That's focus, hard work, persistence.
Yeah. Are you a morning or a night person?
Definitely night.
And a favorite hobby?
Writing.
Great. Shaliest?
Yeah.
Your first job?
I worked at Best Buy. I used to sell stereo equipment in high school.
Very cool.
I can sell you a lamp to go with that.
I don't know if anyone buys stereos anymore.
And other than email, what is it that you read first thing in the morning?
Times of India, first thing. Yep.
Yeah. You're a successful habit?
I get bored very easily, and when I get bored, it makes you try to learn more, read new things, or do new things. So yeah.
Morning or a night person?
Nighttime, definitely.
Everybody here is a night. So am I. And your favorite hobby?
This is completely nerdy. I build model airports.
Yeah.
I'm building a model airport. Yes, like a
Very
railroad
cool.
system, but it's an airport instead.
You know, I may have seen that on your resume, actually.
Oh,
Yeah, I think so, yeah. That sounds very interesting. All right, so with that, let's get started here. Why don't we get 2-minute opening comments from each of you? That can include, your self-introduction and anything you want to say about the budget or otherwise. Start with the lady.
Well, thank you.
A couple of minutes, 2 to 3 minutes at best.
Between the Consul General and Naveen, they did a pretty thorough job on the budget per se.
Oh, yeah.
I will say it is an exciting time on the U.S.-India corridor because of the opportunity that India represents. And because there has been so much focus and drive and intentionality from the government on addressing some of the big challenges. It's not to say by any means that they're all addressed or that there aren't challenges, but the fact that there is this intentionality to tackle those challenges has created a great deal of energy and excitement and enthusiasm. So for me, coming out of a career in government and the last one where it was, addressing the U.S.-India relationship and managing that, to come to the private sector, to the U.S.-India Business Council, to say, how do we now take that U.S.-India corridor and that two-way trade and investment and really help it achieve its potential? And what is the role that Indian companies can play in the United States and vice versa? And one of the things that I think that we're grappling with is that even though you are seeing, I think, the point that Naveen made about potential, or maybe it was Sandeep, about the potential of a 10 trillion market cap, and the fact that the economies seem to be doing well, and yet there is this feeling of dislocation in the populace, and therefore you're seeing political fragmentation, but also political populism and protectionism starting to creep in. And how do we as a business community, as an industry, show that we are not only addressing shareholder value, but we're actually generating stakeholder value. And companies in both countries are having to demonstrate that they are being able to solve problems and meet the needs of their constituencies, of their consumers. So I think that this is going to become more and more of a factor in the U.S.-India corridor. Certainly, I think that companies are beginning to grapple with the fact that they have to show that they are helping to meet challenges. And I think that's an interesting opportunity in that. It's not just through the CSR law and the need to be able to demonstrate what, what you're doing on philanthropy, but it's actually starting to become part of the core business model and ethos. It's an exciting time.
Okay, I'll just make a few remarks on the budget and say a little bit about where I see India going. I think first and foremost, in many years, perhaps the first time, at least in my memory, this is a pre-poll budget that is not a populist budget. It is pragmatic. There is a clear continuity with the previous budgets. On the fiscal front, a little slippage, but largely that reflects the fact that GST revenue is counted only for 11 months because this is the year the system was put in place. So generally the government has stayed with the fiscal consolidation plan, and the budget also, the finance minister in the speech also announced that he is accepting the recommendations of the encasing FRBM committee, which had a future roadmap for fiscal consolidation drawn up, which is pretty tight actually, tighter than the old original one that the government had. So I think that's very important. One game changer announcement in the budget, and that is the Ayushman Bharat. This is the health insurance scheme. Well, not necessarily insurance scheme right now, but I mean basically, it will cover the primary, the secondary and tertiary health care up to 500,000 rupees for 100 million families. Right. I mean, that's a truly game changer reform. It will not happen immediately. There's a lot of discussion that happened in the press about, the provision that was made of about some 2,000 crores, about 20 billion rupees was too little. But I think that's neither here nor there, because I think this is a very large scheme. It's not going to get implemented. It may begin this year, but I think full implementation would be a much longer term plan. So nevertheless, I think this is something very important for India, because you have cases of the poor people. These are all, the 100 million families are the vulnerable families, and in the case of a lot of these families, one hospitalization and the families get wiped out. So this is, I think, extremely important, was certainly overdue. Broadly on the government, very quick comments. I think this is, this is the fourth year of the government now coming to an end very soon. It has been a very activist government. I think, if you look at what has been going on, it really is amazing how much has been done. You may agree, disagree, like, dislike. There's no question that the government is very activist. And of course, starting with the Prime Minister himself, who works about 18 hours a day. Lots of things have been done.
Yeah, he's not exaggerating.
Yeah.
No, it's true. Actually, it is very true. In fact, I'm maybe understating, but certainly I thought 18 hours was safe to say. Number of very important reforms have happened. Insolvency and Bankruptcy Act, GST, now NPA cleanup finally is happening. That was a little bit delayed in my view. But it is now happening. There is no question. The RBI, the central bank, finally really is getting to it. It will happen. Recapitalization has been announced as well. So I finally will get the banks going, and that is going to be a major stimulus, major catalyst to pushing growth by another percentage point or so. There's one reform I had initiated, which is currently, of course, being debated very, very intensely. National Medical Commission Act. This is supposed to, in my view, completely revolutionize the medical education in India. So it is also therefore very contentious. Higher education reforms in the pipeline. I think we should hear about it. I'm hoping in the next week or so. Very important ones. Air India privatization was mentioned. Very, very important. DBT and Aadhaar. I think another set of very important things. There's so much leakages in all sorts of social programs that India has. Lots and lots of these are being capped now. So huge savings there. Just one more minute I'm going to take. Going forward, I think it's mentioned, Naveen said this, but let me kind of reiterate it. I expect we, for 18-19, we should be getting a growth rate of about 7.5%, should shift the following year to about 8%. A bunch of things need to be done. If they get done, there's no question that India has the potential to easily go and hit 10%. But in 10 years' time, certainly will be the 5th largest economy. This year, we will surpass both France and UK. So
that's
we'll become
huge.
the largest.
That's
but
big.
even today, by the way, where India stands, China was about in the year about 2000 or so. So China was was behind 5 other countries, and China was the 6th. And today we are 7th, but it is the same 5 countries plus China. So, so we are pretty much where China was in around 2000. So if when India can, for which I think there is definite potential, do what China did in the last 15 years, in the next 15 years, I suppose India can be easily $11-12 trillion economy in about 15 years' time.
Great, thank you, Shaliest.
Sure, thanks. So a lot of reforms have been highlighted. I often get asked the question about the commitment of the Modi government to reforms, or are reforms happening? And the point that's always made to me as a counterpoint to my argument, which is similar to your argument, is that but they haven't done land and labor. And I think that's a very simplistic way of approaching the discussion of reforms, of what has and hasn't happened. The one I would articulate to everyone beyond the actual legislative reforms, well, 2. One would be demonetization. We can have a discussion on what that is. But the other would be just look at what's happening with budgetary expenditure. But budgets are political documents at the end of the day. All governments in the world, more so in India than maybe others, use budgets to express what it is their political aspirations are, or where they need to focus for the year. And if you look at the socialist heydays of India in the past, and if you look at what was being done, a huge subsect of the budget was being allocated to subsidies. Because if you're a socialist democratic government, the best way to win elections is by spending on people directly, giveaways. And it enshrines you, it gets you re-elected constantly, and it's the best tool a socialist government can ever have. And if you look at what's happening now, and the one statistic I love pointing out, is that almost double the amount of money is being spent on infrastructure than in defense. About 90 billion is for infrastructure, about 50 billion for defense. India is one of the only countries in the world that does that. Most countries prioritize defense way, way more than infrastructure. So India is an outlier. And this is a transformative change that tells you what has happened. Governments now, the Modi government, the BJP, et cetera, are not spending money to win votes directly. Although, yes, you can say some rural spending helps along the way. But it's more about growing the economy. It's more about building industries and infrastructure, et cetera. The second point on that is geopolitics, which is what I focus on, or political risk in general, is driven heavily by economics. The statistic you mentioned right now about India being the 5th largest economy, when you are the 5th largest economy, you suddenly start to matter a lot more to the world than when you are the 20th largest economy.
Absolutely, yeah.
And that drives foreign policy, foreign relations, that drives whether people see you as an opportunity or as a threat, and how the rest of the world engages with you as well, and we can talk about that as well.
Thank you. So we'll start our Q&A with you, Nisha. As I was getting in my taxi this morning, looked at my phone, and there was the USIBC blurb that I read. You'll be proud of me that I read that every single day, right? In there was a newspaper article where you were quoted, budget to stimulate the rural economy, healthcare sector, infrastructure. And as I read through, you did a great job in giving a balanced view that you thought there were some protectionist tendencies to the budget.
Sure.
Can you elaborate on that?
I mean, I think as Naveen alluded as well, there are certainly, certain tariffs that are outlined in that budget that are almost explicitly stated as being an effort to create some protections for domestic manufacturing or domestic industry. And there is a movement within India that also has to be managed, which wants to kind of elevate those sentiments, right? I also, I think in that article made the comment that there are some elements of protectionism that are also emerging in this country. Some of it is in response to the manufacturing machine that China has essentially put in place that makes it very hard for countries and industries in countries to really be able to build up some of their industries. And I think that is the case in, for example, solar. In both countries, in India and in the United States, you're seeing governments trying to take steps to try to preserve the space for domestic industry to be able to rise up. On the other hand, I think there's concern in industry that not become too prevalent, because at the end of the day it will inhibit trade and it will protect inefficiencies, in production. And so there's a balance, and it's a cautionary note, but not an alarmist one.
Makes sense, yeah. And then, like you said, I mean, even in the U.S. here, right? We just had U.S. tax reform. I mean, it's clearly meant to be protectionist, right? To make America great again, to quote President Trump, right? So it's understood. I think your point's well taken. Go ahead.
May I?
Yeah.
I think you guys are being too soft.
Okay. We'll let you be hard on us.
Yeah,
Let's go.
I think, for the Indian case, the trade reform, trade liberalization was a very hard-fought reform. And those of us who were there at the time, since inception, it took a long time to come from, a top tariff rate, top industrial tariff, from being 355% in 1991 to about 10% in 2007-8. And I think,
but the world's also
India,
changed, right?
What do you mean, world has changed?
In my opinion, I mean, globalization has taken, it's a completely different landscape today, right? If you look back, even when I was leaving...
But look, on trade side, some small actions here and there, even actually if I look, the United States, all the fears that actually had been raised, right? I mean, there was a proposal on the table at the time that, they calculating the corporate taxes, maybe the imports will not allowed to be deducted, and that will, become a kind of equivalent of a uniform tariff on all imports. That did not happen. Now, some small actions have happened. But United States is a much larger economy, and the politics is different. But I personally think that, on the trade side, we need to be very cautious, because, what happens is that 1991 imports were 10% of the GDP. And of course, in the worst of the days in 1970, they had dropped to 4% of the GDP. So it was a huge struggle that it went back finally, after a huge amount of liberalization, we went to about, from 10% of the GDP to something like, at peak we had reached 30%, it's back down to about 25%. Now we suddenly see that, look, I have these imports and I could start producing all these. And so the instinct for import substitution returns immediately, which has happened. I mean, if you look at the statements that came from the Revenue Secretary, that it is clearly kind of the thinking is in that direction.
Yeah.
And, you can do that. Certainly, you can import substitute. But it is going to hit your other industries. I mean, this is the problem with,
that's understood.
Because Bastiat wrote it, in 1845, saying that, look, when you protect an industry, it is easy to see what good it does. You impose a tariff on steel, steel output will go up. But the damage it does is spread throughout the economy, which is much harder to explain and much harder to understand, which is why the trade economists tend to be very vigilant on this. So Take steel case itself, right? I mean, you want to build up railways, steel becomes more expensive, railway expansion is going to take a hit. Almost anything you use today, from kitchen utensils to automobiles to refrigerators to two-wheelers to bicycles,
you
can go all the way down, farm machinery, everything uses steel. Everything will rise in prices. So in the end, unless one is very vigilant, I think this can really open up.
I don't disagree with anything you've said in terms of the.
I'm just saying you guys are being
cautions.
too soft.
Okay, point taken.
Point taken. We get it. Okay. Let's shift to GST. Arvind, I'm going to look to you again. We certainly heard there were, teething problems, and it's expected. I mean, this was a massive effort. Is the positive impact now starting to emerge? Or is it too soon to tell?
I think it will still be a little time.
Right.
This was a gigantic reform. I
Right.
mean, this was absolutely a gigantic reform, big game changer and all.
The background of GST, please.
I mean, I don't know how far back you want to go, but effectively there are lots of these different indirect taxes India has had, both at the central level and at the state level. So numerous. I mean, there are different counts of it, but you can assume easily a dozen different taxes were replaced by this single tax. And
one goods and services tax across the country.
And so across states and the central government together, there is a single indirect tax. There may be some tiny ones left here and there, but largely now there is a single indirect tax that is imposed, collected at one point, and then shared by the state and the center and so forth. What that does big time is that there are now, and that effect is beginning to be felt very clearly. I mean, people who do
the signs are already emerging. Yeah,
transportation industry, people in the transportation industry will tell you, because between every pair of states,
they were stopping
there was
the
a post.
trucks.
Yeah. You'll stop the trucks, and then see, what are you carrying, etc. Because tax issues arose. Now there is a single tax paid at single point, so you can breeze through.
I think Naveen's trying to make a.
So that
One
alone.
of the biggest challenges that we had was the cascading effect of taxes, because in India you had central taxes and state taxes. So you had, for services you had a federal levy, and for goods you had a state levy, and the two really didn't talk to each other, in the sense you couldn't get an offset one against the other. So that's one big change that's happening because of GST. Now it's going to be a lot more seamless. Although you are adopting GST, which is a different form of GST than you would see internationally, because you have a dual GST. You have a central GST and a state GST. But if it all goes well, essentially the benefit should pass on to the consumers. And there are some measures which have been introduced in the law to avoid companies having to take advantage of GST in terms of anti-profiteering, to make sure the real benefit actually goes to the consumers. So right now there may be inflationary trends, as is expected on GST, that the first couple of years you do expect it to be inflationary, but over a period of time it should benefit the consumers and it should add to the economic growth.
Thank you. So what I'm hearing is that the positive impacts are already starting to emerge, and it would add to the GDP, and was a very positive thing that happened.
Absolutely.
Thank you.
No doubt.
I'm going to mix some stuff up here, Shailesh. I'm going to ask you a question that I read in one of your articles, which was not on my radar, and that's why I'm going to ask. You mentioned that China could potentially replace Pakistan as the main security concern for India. Can you please elaborate on that?
Could?
Yeah. So China has been a security concern. I think most people know the history about Indo-China relations, the War of '62, etc. But one of the, if you kind of think about this a little bit deeper in terms of, okay, there's a border conflict. Everyone knows about that. That's an obvious point of tension or a flashpoint. But this is a view that, think about Pakistan now. Pakistan is obviously viewed as the more preeminent threat, being whether it be Kashmir or terrorism or infiltration or whatever else. But that is ironically predictable activity. In other words, Pakistan would never be characterized this way, but I will, which is they're a predictable actor. They're a very rational actor. You know exactly what they're doing and why they're doing it. You know that we now know why Mumbai happened. There's some hidden story. Mumbai 2008, there's some hidden stories. The signal was being sent to India as much as it was to the Pakistani leadership at the time. There was a nuclear component, et cetera. There's a lot of things that are happening. But it's all very rational if you think about it. The problem with China is that they are, in my opinion, going to be increasingly viewed as the enabler of Pakistan. So Pakistan is a completely broken economy at this point in time. Not only are they broken, they're isolated, they have zero friends in the world, the U.S. has abandoned them, their current account deficit is out of control, fiscal deficit is broken. When you're in that situation and somebody like China comes along and gives you $55 billion, which is exactly what they did, you're now a patron state or a subservient state to China. And you're now also going to do exactly what China wants you to do. So China is Pakistan's enabler, which also means they have the potential to be a spoiler. Second point on that is you also think about kind of regional politics and relationships. There is and this is what I was mentioning earlier, there is a form of a Cold War 2.0 emerging. It's always been there, but it's emerging in a different way now. What happened in Doklam is an example. What's happening in Sri Lanka with Port of Hambantota and the investments China's doing there, Nepal, Bangladesh to a lesser extent, Pakistan I just mentioned, and what's happening in Maldives at the moment. The Maldivian story, if you're not familiar, there's an uprising happening, and India's being asked to come in, not an uprising, but India's being asked to come in and help. This would put them in direct influence contrast with China. China is, again, very much involved in Maldives right now. So you're seeing these weird circles develop of India and China confronting each other in third countries, which is very similar to what US and Russia did throughout the 70s.
Very interesting viewpoint. So I certainly was reading about that, and it did catch my attention.
Can I just
please
add
do.
one comment
Please,
on that, though?
please.
No question that there is a competition of sorts that is underway, but I think I wouldn't go quite so far as where you're going in terms of what's happening in the Maldives or kind of large on a larger scale throughout the region. Is there a geopolitical competition? Sure, there is. There's also very, very many points of engagement and collaboration and co-investment, and it's very managed. The same way that the U.S.-China relationship is one of both competition and cooperation or collaboration. And I don't know if Danny's still here, but our resident China expert, Danny Russell, was in the audience a little bit earlier, and would agree with this. Similarly, the India-China relationship, I think, is one of managed competition. And I wouldn't quite go as far as you just did in terms of the sharpness there.
So I'm not trying to say there's going to be a war. That's not the point of this. The point is, though, that...
But the fact that there could be a bigger threat to India than Pakistan is
right.
today.
You're seeing a much more complicated situation emerge, which is going to be much harder for India to react to. Again, with going back to the Pakistan, which is always the cited source of tension, you know how that game plays out, which is they both exert restraint, they're both pressured, neither side does anything, and then India every so often will do a covert action across the border, which is a new development, by the way. With China, you don't have that strategy. That game plan hasn't been fleshed out over 70 years the way it has with Pakistan. So what is the game plan with China? And that's where things start to get a little bit more complicated, which is exactly this point, though, that the more they cooperate, more economically involved they are with one another. Pakistan and India are not very economically involved. China and India are. So that then even further complicates the reaction on India's side, and how are they going to deal with it? So that's why it's a threat, though.
Okay.
So one hypothesis was that all these tariffs were on China.
Yeah.
That is certainly a hypothesis, which I've heard echoed in many different...
Have you? Yeah. All right. So next, the massive announcement in the health in the budget was all about healthcare, right? I would look to you to dig deeper into that and tell us if you think this merger of three entities coming together, going public, was that all thought through properly?
Sorry, merger of which three entities?
The insurance companies in India.
Okay. So, sorry, I
Okay, so
not sure what.
First of all, I think the focus on health in this budget is very welcome and very positive development. The increased healthcare expenditures that are outlined in the budget are very welcome. The fact that they are moving towards a system of universal coverage, or at least expanded health coverage, I think, again, a big move. Obviously, the devil's in the details and how that fleshes out and what the plan is for implementation, execution, and what the opportunity is for investment, right? Because there is huge interest in India's insurance market, whether it's in the health and life insurance or in the various other insurance lines, casualty, et cetera. There's huge interest and huge opportunity to open that up and actually bring in foreign investment and also, technology and best practices to create more efficiency in insurance.
Yeah, and what I'm after is, really, when you look at our neighbors to the north, Canada, they've always had, government-sponsored insurance. I have friends there, and they're always, all I hear is complaints that the system doesn't work, it doesn't work, it doesn't work. So with having Modi Care now, are we heading in the right direction, or is this?
So, well, I think in terms of coverage, obviously, the direction is right. How you do it, I think that is the big challenge.
Right.
Yeah, that is
and for that, which is why I've been saying this, that this is a very critical moment. I don't think India should move into this in a big hurry. I think all the leading experts around the world ought to be consulted. This is a complicated area. I mean, I know a little bit about it, not not enough that I would volunteer to actually design this scheme for India, but I know enough to know that this is something on which we ought to consult the very best experts around the world. Even our own experience, there has been in so this is what you are referring to, the RSBY and all. I'm not sure what you're saying. There in existence there are these insurance schemes, the Rashtriya Swasthya Bima Yojana, and number of them in the different states also run by the state governments also they exist. But none that has really worked flawlessly and satisfactorily. In fact, a lot of the studies that have looked at the functioning of the RSBY find that it has been very ineffective, largely. Partly, of course, it's the coverage is only 30,000 rupees, and then also that restricts, in terms of what procedures are covered, what are not covered, and so on. So, the rate of utilization, I think, only about 1.4% of the families that are in the insurance that are registered with the RSBY actually are using it. That is 1/3 of even if you look back at the hospitalization rates in general. So in the urban areas, there are currently about 4.5%, the latest figures, and in the rural areas, 3.4%. So the utilization rates in RSBY are even lower, significantly lower. Yeah. So I think this really, and I do think that once it is in full shape, we are talking
it's the largest in the world.
Figures. Which would be easily 10 times of the 2,000 crore rupees or 20 billion rupees that has been allocated, and perhaps more.
Thank you.
So I can say one thing on Modi Care. So Modi Care is one of the most, people here know about it, but one of the most underappreciated things that just happened in the past week regarding reforms, or however you want to characterize it. Post-demonetization, those of us who watch India were always waiting for the next big surprise stealth hit that Modi would do. And I think we just have it. This is it. I don't know what else he could do after this. Second thing, though, is what's a little concerning, or what's interesting, is if you watch the foreign press or those who follow these things, they don't really know what to make of it. And one of the issues is, when I was at Treasury, for example, and this is across the board, this is IMF, World Bank, everyone hits India for subsidies. You guys spend too much on subsidies. You need to bring down the subsidy bill. It's a favorite talking point. But those same institutions would probably, if asked, what do you think about universal health care, would say, no, we love the idea. So now what do they say to India in this case? We love universal health care, we love Modi Care, but it's going to cost a lot? Yeah. And they don't know the answer, so they don't know how to deal with it. And that's why I think a lot of them are flat-footed on the issue. The danger is, does it go the way of entitlements in America, where it consumes 3/4 of the budget?
Okay. Yeah. So that's where the design comes in. But just to rejoin you on the fact how big it is, to me, in the 4 years, there are two major programs that the Prime Minister announced. One was Swachh Bharat. I think that was a true game changer reform, if you want to call it reform, but it was truly, a transformational mission. And this is a second one, which is of the same magnitude.
Okay. Unbelievably, we literally have 4 minutes left, and time just flew by, and that's one promise we've always made to our guests, that we will finish up right on time at 8 o'clock. People have commutes and need to get home. So with that, I'll ask one last question, and would request each of you to answer it in 2 minutes or less, starting with you, Shailesh. Are you bullish on India?
Yeah, definitely bullish. The numbers, the demographics, et cetera, all are pointing the right direction. There's no reason not to be bullish on the story. The question is, do you exceed
But the
growth?
demographics have always been there, right?
Right. So what is different now is the fact that you are reaching a tipping point in terms of middle income status. You are reaching a point where the world cares. The point I mentioned earlier, the bigger you get, the more you matter, the more you matter, the more people engage with you. There is a self-fulfilling prophecy that comes with that, so it becomes momentum at that point. The question always becomes, can India reach its potential? 7% is base case. Can it get to 10%? And that's always been the touchy point, so we'll find out about that.
Okay. Nisha?
Extremely bullish on India. I think the question of India's rise has been asked and answered, and there's an inevitability to it. The question is how fast and how high, and that will be determined by some of the choices that the government makes as it moves forward. I do think that, as in many corners, including the United States, political fragmentation is something to be watched. And is a danger zone. But again, it's a danger zone globally, and that means that some of the underlying factors that cause political fragmentation have to be addressed.
Definitely bullish, with the hope really that the Prime Minister Modi returns in 2019 with a full majority. I think that is very critical for India going forward. At this stage, I think a lot of fronts have been opened up, a lot of reforms have been opened up, and he needs to complete those. He will have majority in Rajya Sabha very soon. So if he returns to Lok Sabha with majority, I think in the following 5 years, he can change the entire map of India.
Okay. Well, despite best intentions, we did intend to have Q&A, but I don't think we're going to do that, given that I know you have a conflict and you need to run, and many of you have commutes and need to get home. This concludes our program. Thank you very much, everybody, for coming, and we look forward to seeing you again next year. Get home safe, and thank you again.